Before we dive in, this video is sponsored by Eduquest, an online learning platform that helps you learn trading, coding, and more in depth about different courses in Tamil and English. Clean design and gamified courses with real mentors. Check it out, link is in the description.
The struggle to find courses that truly speak your language, it's finally over. Welcome to Eduquest, where learning is made just for you. At Eduquest, we bring you a wide range of online courses, from career building programs to skill boosting masterclasses, all in your regional language. Because we believe language should never be a barrier to success. Our courses are tailor made after understanding what today's learners really need. So why wait? Start learning the smarter, simpler way only with Eduquest. Visit eduquest.courses and explore your next course today. And hey, don't miss out on our exciting offers and promotions.
Now let's talk. Let me tell you something people don't admit until it's too late. Most traders spend most time choosing which path to take, either funded accounts, prop firms, or personal account. It's like choosing between two weapons before a battle. Both can kill, but the only question is which one suits your hand. Let's break it down, not from theory but from the field. Personal trading is simple to understand. Your money, your rules. You open a broker account, deposit your savings, and start trading right away. No boss, no restrictions, no evaluation, just raw exposure to the market. It sounds powerful because it is. But the power without plan is just a time bomb, and this is where most people blow up. You start with $500 or maybe $1,000 if you're feeling bold. You scalp, you swing, you try all the strategies, and you copy trades from random Telegram channels. At first it looks promising, you have a few wins, but once you have the losing streak and one bad week hits, you'll have a huge drawdown and literally most of the account is gone because you will risk more. And even if you don't, you're psychologically not programmed for that. And you'll start losing more because of revenge trading and other psychological factors. Because when your real money is at risk, you'll start taking wrong decisions and revenge trading. So that's where you burn most money. You see, personal trading is unforgiving because it exposes you to the real consequences early on. You're not playing with paper losses or evaluation resets. You're dealing with your own savings, your own stress, and your own psychology under pressure. You are naked in the storm. And the market doesn't hand out umbrellas. Now let's talk about funded accounts. Okay, prop firms, they sound sexier, right? 100k, 200k just for a $500 or $1,000 fee. No risk to your capital, just to make some few percentages and hit withdraw. You follow the rules and you get paid. It's structured, it's capital efficient, but also very, very misunderstood. Let me explain. Funded accounts, they sell you a dream. The prop firms, they say pay a fee and prove you can trade, and then we'll give you a bigger account to manage. But here's the devil in the details. Those rules you glance over. Before clicking buy challenge, they weren't suggestions but traps, built to filter, restrict, and control. Let's say you sign up for a two-step challenge. Phase 1, you need to make 8% profit, and phase 2, you need to make 5% profit. And max daily drawdown is 5%, and max overall limit is 10%. So technically, if you are buying a 100k challenge, the only capital you have is a 10k to play with. There is no news trading and no holding the trades over the weekend, no martingale. Some won't even allow hedging. Well, most of the firms doesn't, I think. The moment you slip, you're out. There are no second chances, no partial refunds, just a polite email saying violation of terms, account breached, and boom, that's it. Here's the cruel part. Most traders fail funded accounts not because they can't trade, but they can't trade inside a cage, with the restrictions and everything. You might have a solid strategy, but can your edge survive when you must avoid trading CPI or FOMC news, stay under daily 5% loss limit, even on a winning position that just pulled back? Then you need to risk less. In some prop firms, you need to hit 8% target in a 30-day window, which most cannot do. And the firms are just counting on it. You know why? Because funded accounts make more money from failed challenges than they do from successful traders. So what do? You're stuck in between two models: risk your own capital, your own wins and your own wounds. Otherwise, use their capital but follow their rules. Neither is a magic bullet. Both comes with pain. So now you need to understand that to each model you can game the system. Here's how. Use funded accounts for practicing, and they are your controlled lab. You get structure, you get accountability, and when you fail you only lose the fee, not your life savings. And you get to paddle your ego, your discipline, your execution, but with the prop firm's money, so this is a better shot if you're a beginner. And I help traders pass these accounts all of the time. Phase 1, phase 2, I've done it across firms. And when they follow my steps, my rules and my rhythm, they get funded. As simple as that. Most traders should not start with a personal capital account. Not until they have passed at least 3 to 500 challenges with consistent payouts. Not until they've avoided over leveraging for more than a month and traded through a losing streak without revenge trades or changing their risk exposure. The market isn't emotional, but we are, and funded accounts help expose those weaknesses before they cost you real capital. So, should you ignore personal trading? No, absolutely not. Because long term, the goal is freedom, and no prop firm offers freedom. They offer cash, they offer leverage, and they offer opportunity. But they also offer oversight, like a hitman on a roof. Okay? You'll always be trading on their playground with their rules. And if you do well, they might even start limiting you. And that's where the real game is. Use funded accounts to generate profits and scale, then move that cash into your own personal trading account. Now that you have got edge and capital, you are your own firm. That's when you start stacking. Here's what I recommend. Start with one or two low-cost prop firms. Blueberry Funded is a solid one. This is not a promotion, but I've traded with them and they're good. They got decent drawdown and an average cost, so that's fair. And if you use my link to sign in, and I'll help you pass phase 1 for free. Join Portfolio Maxing, the link is in the description, and DM me there. And use those profits to build a 1 or 2k personal account. Trade it once you've passed multiple funded accounts, like I said, 3 to 5, and proven that you can stay consistent at no point risking your own capital if your mind is not ready. As your skill compounds, add more capital from prop firm payouts and other sources. Grow consistently. And for those who want to skip the trial and error phase, I have signals. I provide signals on my Telegram channel, and they are not just random trades like you see on the other free Telegram channels with multiple take profits and multiple stop losses. I am taking clean, back-tested, sniper level setups sent to you live. My entries and my exits, my own trades. And I don't sugarcoat losses, but I also don't brag about wins. I trade, you copy, and you learn. So which model wins, personal or funded accounts? This is not a battle. This is a sequence. First use the prop firms to learn and earn, and then use the money to become your own bank. Do not worship either model. Don't lock yourself into one dogma. Be warrior, my friend, like Bruce Lee said. Because real wealth comes from understanding how to switch gears at the right time. Build your empire with their money and your own freedom with yours. Control is more powerful. If you want to talk more, you know where to find me. See you.